Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique, tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial Services. Thank you very much for being with us. I am Mark Bunting. I'll be your host today. I'm the host of RCTV, and we've been doing a lot of these live core conversations, and they're very popular. The subject today, the topic, is discovery investing strategies. We're taking your questions. I see that there are some in the comment section already. Just to plop them in there. And we will get to as many as we can, likely in the latter half of the show. I see some questions already in there right now. Now, our guest today is Willem Middelkoop. He is the founder and chief investment officer at Commodity Discovery Fund. He is joining us from the Netherlands, I believe, today. Willem, let's bring you in here. How are you, sir? Thanks very much for doing this.
Yeah, thanks for the invitation, Mark. I think this is the first time for us meeting here. So, well, let's kick it off.
Absolutely. It is the first time, and I've seen a number of your interviews before. I love your setup, by the way. Is that your trading room?
Yeah, my colleague Ben is in the background. He has been a full-time trader for his whole of his life. Used to be on the option market in Amsterdam. He's been with us since 2011. We do almost all of our trades ourselves. So, well, we're here near Amsterdam, near Schiphol Airport, in a wonderful 400-year-old building.
Beautiful. Sounds very nice. All right. Well, let's start with an overview here. You founded the Discovery Fund with the mission and the idea and the mandate to invest in significant discoveries from around the world. So can you give us a snapshot of your overall investing philosophy?
Actually, it's quite simple. We don't try to predict discoveries like other funds, like some peers, like Crescat. We only go in after the discovery has been made. So we always look for a very strong discovery hole. Then we go in early. We go in big, well, with quite a bit of money. And then we want to stick with the winners. So if it's a real winner, it's moving towards tier 1, tier 2 status. We grow our position. And actually, we buy and hold. Be right and sit tight is our credo. And then we just wait for the buyout. Because if you do find a nice tier 1, tier 2 project, you will always be bought out by a producer looking for reserves, more reserves.
Right. Now, speaking of takeouts, that is one of the benefits and the beauty of your Discovery Fund, Commodity Discovery Fund, and that is that you said basically on average there's a takeover at least once a quarter, and since inception there's been more than 75 of them. My question about that is, I'm sure many of those have been big wins, but are there occasions where a company gets a takeout offer and basically is taken over at a price that maybe you don't agree with, and that some of the potential gains you were hoping for are curtailed, so the timing and valuation doesn't always work?
Yeah, actually, I've been stupid enough to start a commodity fund in 2008, which was the top of the last cycle, you might remember. And we've seen ever lower valuations almost for 15 years. So we even had winners where the discovery was good and you had a buyout, but we lost money on our investment because of the valuations were so low. And the record low in valuations was reached during the COVID crash in 2020. So now we've seen just a pickup in valuations in the commodity space, but we're still trading near record low valuations. So this bull market, which is just starting, that's at least our opinion, has a long way to run, and it could actually run for a few decades based on a perfect storm of shortages developing, higher interest rates, higher inflation. And of course, we have the competitive tension between the West and the East, between the US and the BRICS countries. And this, I think this paints a very positive and exciting picture for the years ahead.
I want to circle back to what you were talking about there, your broad macro picture and ideas about what's coming the next few decades. In the meantime, I'm curious about some of the comments you've made, such as you'd like to have at least 1% in 40 to 50 tier 1 and tier 2 discoveries. Can you elaborate on that philosophy?
Yeah, we learned from the past 15 years that if you invest in a tier 1 or tier 2 project, the valuation of these companies, these exploration companies, will grow to at least $500 million and often to $1 billion or even more. So if you keep your position at 1% of an exploration company working on such a great discovery, your small investment, 1% investment, will grow towards $5 million or even $10 million. And by doing this, you can spread your money among 50 to 100 projects or 50 to 100 companies if you invest just 1% of your assets under management in each and every company. So by doing that, you spread your risk because you're never certain what will happen with a company. And we've seen incidents, we've seen accidents. A story can break down. We've seen it with Victoria Gold recently, although that's a producer. You should always spread your money and spread the risk because this is not a very easy environment. We often say, don't try this at home, leave this to the professionals.
Willem, a lesson that you said you learned several years ago was not keeping 1% in Ivanhoe Mines. And you're saying that if you had, that'd be worth something like $250 million. Is that the case? Yeah. And what did you learn from that situation?
It's a great example. I remember when I visited a presentation by Robert Friedland in Cape Town during Mining Indaba, which is like the PDAC, but then in the south of Africa. And I was listening to his story, and he was speaking about the 3 projects they had in Africa. And the valuation of Ivanhoe Mines was around $250 million. So you could buy 1% of the company for $2.5 million. And I remember discussing the situation when I arrived back home with our team. And well, the copper discovery was in the DRC in Congo, and there were all kinds of risks. And then they made this huge discovery, which got better and better. And now, if you look at the valuation, this is 8 years later, and Ivanhoe Mines is valued at $25 billion. So if you would have stuck with your 1% position, would have been valued at $250 million nowadays. So that's why we have this 1% rule. On average, we keep 1%. We have an investment. We own 1% of the company, and we grow with the discovery. But there are also situations where we own 4, 5, up to 7, 8, 9% of a small exploration company working on a great discovery.
All right, let's get back to your macro view. You've said that a 40-year downtrend in bond yields and inflation, that's been broken the last couple of years, and that it's really a perfect storm, quote unquote, for critical minerals. You've got shortages, there's currency debasement, geopolitics always rearing their head as well, impacting things. So can you sum up your overall view of the commodity sector and look out a decade or two?
Yeah, because we're all children of this bear market. We've been going down in our industry in valuation-wise now for 15 years. So it's very hard for people to see the new bull market and to see the upside. And I've been lucky enough to start investing in this space in the early 2000s. And this actually reminds me a lot about this situation reminds me an awful lot about 2002, 2003, when gold was just breaking the $330 barrier. And there was a very important technical resistance at that time. And then all precious metals related stocks started to jump 5, 10, 15% a day. And when we look back and look at this bull market between 2000 and let's say 2008, 2009, 2010, precious metals gained on average more than 1,000%. And this has learned me to really specialize on the larger trends. And as said, we were unfortunate enough to start at the top of the last cycle. You only learn that in the rear view with a look in the rear view mirror. And now I think we're in the very first innings of a very strong bull market. As said, you have this perfect storm. We broke the 40-year trend of ever lower interest rates and inflation, and now I think we witnessed the start of an uptrend in interest rates and inflation. So inflation is coming down now a bit, but then you might get another wave of inflation. You have these shortages developing, especially after 25 and really after 2030. We did a lot of supply and demand studies for the different metals. You'll see shortages developing everywhere. First, production shortages, where mines just can't keep up with the demand. But we could even reach real physical shortages, and then prices can jump very strongly over a very short period of time. So I think this is the start of a generational bull market, which will take decades, because this fundamental situation, supply and demand situation for many of those metals, will get worse year after year.
And within that, you said recently in an interview that you're actually more interested in what's happening with silver and the prospects there than gold, although of course you like gold and gold companies. But so you made the comparison between palladium in 2015, 2016, when it really took off, and silver today. Could you flesh that out for us?
Yeah, I think silver might be the most explosive situation I've seen from a fundamental supply and demand structure in the last 20 years. And it reminds me on the palladium situation. In the palladium situation, there were a lot of paper shorts. We've seen the same in gold, silver, platinum, and palladium for most of the time during 2010 and 2020, a lot of paper shorts. So this means there are many people speculating on lower prices. And then we got this huge demand for physical palladium around 2017, 2018, because we needed palladium for the exhaust systems for the hybrid cars. And because of the huge physical demand, the paper shorts were cornered, and we got a huge short squeeze. And there was the reason why palladium jumped 4x between 2016 and 2019. A similar situation is possible with silver now. World silver mine production is only just over 800 million ounces. 600 million ounces out of this 800 million ounces is needed just for the industry. Silver is needed just as a product which is used in iPhones and other kind of products. And when the monetary demand kicks in, because silver is poor man's gold, so when gold gets more expensive, many of the people who have a bit less money to spend, they will start to invest in silver. So when the monetary demand for silver kicks in, there will be shortages happening quite soon. And if you look at the structure of the silver market, silver is trading 40% below the record prices of 1980. 40% below the record price of 2011, while gold is making new all-time highs every day. So silver is very explosive. As a fund, we're overweighted in silver. Silver is outperforming gold in the last few weeks and months. So this is a very explosive situation, something to watch carefully.
Silver pulling back some today. As you know, the gold-silver ratio is sitting around 84, which, as you also would know, is historically high. So let's get to, actually, you know what? We talked to Rick Rule last week, and he said he's seeing something in the silver market he's never seen before, and that is central bank buying of silver. Are you seeing the same thing, and can you explain it?
Yeah, just first on today's the last month of October. So I think we see some painting the tape, which means that there are vested interests who are looking for a lower close of gold and silver at the end of the month. So I think this is a short-lived correction. And to come back on your question on silver, we know we have a statement. This is all officially, it's a public statement by Russia, that besides gold, they will start to invest in silver as well, and some other special metals like palladium and platinum. I think that's a strong mover of the current uptrend in silver. And it shows that even the sovereigns can get active, while there are very few central banks actually who own some silver. And this is such a small market. The whole physical demand for silver worldwide is less than 30 billion a year. So when some larger players enter this market and start to accumulate physical silver, you can expect some fireworks.
Let's get to some specific names, Willem. In the Discovery Fund, you've mentioned that Aya Gold and Silver and Hercules Metals have been prominent positions. Is that still the case?
Yeah, that's still the case. Aya Silver, I think, is the best silver discovery out there. So they have a project in Morocco, finding lots of silver already, in production. Hercules Metals is a totally different story. This used to be a silver discovery in Idaho. They found around 150 million ounces of silver, which was nice, but not that spectacular. But then they started drilling a bit deeper. And to everybody's surprise, they found a copper porphyry, a very strong high-grade copper zone. This discovery was published in October last year. Stock jumped a lot. And then something happened which I've never experienced before in the 20 years I've been investing in these discovery plays. Barrick came in within weeks and took a 15% stake in the company, gave the company almost $25 million to start exploring. And recently there was a town hall meeting in Cambridge, which is near the discovery in Idaho. And Barrick sent 5 of their geologists to the town hall meeting just to inform the general public why they were so active in that region. And that tells you a lot. And to make things even more interesting, I was visiting a gold conference, the Denver Gold Conference in Colorado Springs a few weeks back, and I was invited to sit in with the CEO of Barrick, Mark Bristow. And because Barrick is involved in Hercules Metals, of course, this is a very small investment for a large company like Barrick. But I asked a question after his dinner talk about Hercules Metals, and I learned that he knew all the details. So Barrick is taking this copper discovery very serious. So it's a copper-silver discovery. The footprint of the system is huge. And actually, Barrick confirmed that they have seen the largest staking rush in North America in 25 years around this new discovery by Hercules Metals, which actually came down a lot in recent months. So I think it's a buy. Actually, we've been adding every day this week. We own almost 5% of the company now, because if it's good enough for Barrick, it's good enough for us.
All right, nice thorough answer there on Hercules Metals. We had a question from Randall West on that, so thanks for that, Randall. Speaking of questions from our viewers, let's get to a couple here. Dennis Whittingham, Willem, you hold a position in Solgold. What do you think of the de-risking strategy being pursued by management right now?
Yeah, Solgold is a great example. You know, this is the largest undeveloped copper gold discovery, copper gold project worldwide, besides Pebble, but Pebble has some problems of its own. because that might never be developed, at least not in the first few decades. So Solgold is out there. Solgold has some very strong shareholders. BHP has a position. Newmont has a position. A Chinese group came in to buy a position. The valuation of Solgold is less than 400 million. Based on the size of the project, it should be at least 1 billion. So this is a steal. But it's a great example. We're still near the 120-year low valuations. It will be a matter of time when we are in a new bull market now, and ounces above the ground are valued almost at $3,000 per ounce. The over 20 million ounces of gold Solgold holds, and all the copper they own will be valued much higher in the years to come. But there's always a delay before projects and companies like Solgold catch up with the price of gold or copper. And this lag, I always tell investors, it's like legal insider knowledge. You know that the valuation of these projects will go up. You can still buy them pennies to the dollar. And that's how we see Solgold. So we are long Solgold.
All right, very good. We have a question from Benny Fogel on Reyna Silver. We had the VP of IR in this studio right beside me here just a few weeks ago, Lauren McGaw. So I urge you to watch that interview on our YouTube page or on the Red Cloud website, YouTube channel. So Benny asks, do you still own Reyna Silver? If so, what are your thoughts?
Yeah, we know Reyna Silver very well. We were founding shareholders of Reyna Silver. I think we owned 7% at the start. We were very intrigued because, they had a very strong technical team and they had a nice property to explore in Mexico. Unfortunately, the drilling in Mexico didn't deliver a tier 1 or tier 2 discovery. They have been investing in some other projects. They've been merging now with Reyna Gold. And I think that shows that many of these juniors out there, they have a hard time to survive on their own. And because we stick with the winners, we sold over the years most of our position in Reyna Silver because we had a very low entry point. And actually the valuation jumped to over 150 per share a few years back. So we sold almost all of our shares in Reyna Silver, and we reinvested in the tier 1 and tier 2 discoveries. There's so much value to be found in projects which have proven to be the winners. And our strategy has changed a bit over time. So we stick with the winners and don't want to invest in hundreds of juniors. So we've become quite selective.
Now, Willem, we of course don't expect you to give away the farm and tell us everything you own in the Discovery Fund, but I'm just curious about some of your more high conviction names across the spectrum, starting with gold. Are there a couple of names there that investors should know about?
Yeah, just start with a name which is more conservative, has less risk. And we always been a large supporter of Next Gen Energy, the most wonderful uranium discovery, the best uranium discovery in the last 30 years in Saskatchewan. Actually, they're very close now to receive their mining permits. And once the mining permits will be received, and I think it's not a question if they will receive it, but only when, I expect a revaluation again. And Next Gen Energy is a great example as well, because we started to invest in this company when they were valued at sub 50 million Canadian dollars. The valuation is now almost $6 billion. So it shows how much value can be created by a tier 1 discovery. But if you look at Next Gen as a case study, they will be able to provide 20% of world uranium once they're in production, let's say in 5, 6, 7 years. And then their free cash flow could well be $2 billion a year. And if you look at the current valuation, there's a lot of room to grow for Next Gen Energy. But I think they will be taken out before that. and they won't be taking out for $6 billion. Expect a buyout around $10 billion. So there you have very limited downside. You have got quite a bit of upside still. Another great situation that's the totally different end of the spectrum is Sitka Gold. Sitka Gold, we've been invested with them since they were valued less than $10 million. They are making new discoveries almost every month now in the Yukon. They see a lot of visible gold. They are proving that they have a very large system. The jury is still out. The valuation is up around $100 million now. But if this system is as large as we think it is, this could be a situation where you can see the valuation of Sitka going up to $500 million or even more. And yet some analysts already compared their discovery with Snowline's gold discovery, also in the Yukon. But the advantage of Sitka Gold is the infrastructure. There's a road running up to the property. It has a very good postal code. It's relatively near Victoria Gold, and we own quite a chunk of that one as well.
We talked to the CEO of Sitka Gold just the other day at the Red Cloud Fall Mining Showcase. So interesting to hear your thoughts on that one. And now you've been talking about specific companies, and I'm just wondering, you've also advised self-directed investors who maybe don't have the acumen or expertise or the time to do these deep dives on companies that you say you're better off just buying an ETF, a silver ETF, a gold ETF, or like a COPX in the US, which holds copper companies. Can you expand on that idea?
Yeah, I think ETFs are so successful. They were invented as an asset class, let's say 20, 25 years ago. More and more investors are starting to use the ETFs because you buy a basket of companies. So if you like to invest in uranium, it's way easier to buy the URA. You have a basket of the best uranium stocks. And actually, even in our fund, we pivoted a bit. Let's say 60%, 70% of our fund is still discovery, exploration, development stage companies. But already 25% of our fund is invested through ETFs now. Why? Because we have much more liquidity there. It's very easy to go in and out of position. You can do a lot of swing trades because often in the world of commodities, if stocks start to move up, you get a very sharp rally, which takes a few weeks or a few months. And you can play these trends quite easily through the ETFs because many of the smaller names are more illiquid. And since our fund has grown quite a bit, we have around 150 million Canadian dollar under management. It's too risky to have all that money invested in quite illiquid names, which can go down during market crashes for 70, 80%. So if you have the more liquid ETF positions, it's very easy to sell them, to switch to another trend, or even hedge your own portfolio by using some specialized ETFs.
That's very interesting. A couple of questions here, one from Joe Rue, another one from Georgial Krisen, and they have to do with the fund. See if we can kill two birds with one stone here. So George asks, the minimum investment is $50K, correct?
Yeah.
Correct? You raised that from 25 a few years ago?
Yeah, that used to be 25K, but after the COVID crash, there was such a huge demand to go in inflation trade, reflation trade, to go towards commodities. So we sometimes had to board 100 new investors every month. So then we decided to double the minimum investment to 50K. When the good times return, we see the inflow already picking up. We might jack up that minimum requirement to 100K. As said, we have around 150 million Canadian under management now. We hope that we will never grow towards 1 billion because the sweet spot for these kind of strategies will be around 100, 200, 300 million. So we're not looking to become a very, very large fund. We're very happy and comfortable with the current size. I like to work with a very small and dedicated team, and that's what we have now. So I'm not looking to add a second fund or a third fund. That's something we have been thinking about in the future, to add a silver fund or uranium fund or even a crypto fund. But we'll stick with the discovery fund. Just stick with the winners. We added quite a bit of research on Australia, because most of the investors, I think, also which come into income on your show are too much focused on North America. We spend a lot of time researching Australia. Australia is under-researched, underexplored compared to North America. So some of our biggest winners in the last few years have been Australian companies like Greatland Gold, the Grey Mining, Chalice. So that's my advice to North American-oriented investors. Don't ignore Australia.
What was the first name you gave us there among those Australian companies?
Greatland Gold, which is London listed, which made the Havieron discovery, which is 40 kilometers east of the Telfer mine, which is owned by Newmont and now sold to Greatland Gold. GGP is the stock symbol, listed in London. They have a great upside. It's a story like Solgold. They own a huge discovery. The valuation is very low. They just had an agreement that they could buy the Telfer mine of Newmont. It's an incredible situation. Well, do your own research. I think there's a lot of value to be found there. It's one of our top 10, even top 5 positions.
All right, you've been giving us a nice insight into the Commodity Discovery Fund. That was one of Joe Rue's questions. His other question, are all the stocks owned by your company, or are they held by a third party?
Well, of course, we use brokers, and we do the trading through our brokers, and we just use the institutions who hold the shares for us, and that's like a normal practice in the fund industry. We're highly regulated. We're a UCITS fund. That's a European structure. And it means that regulation is very tough, and we have to, of course, comply to all the rules.
Couple more questions here, Willem, from viewers, and then I've got a few more, and we'll wrap that up. Just trying to find the one here from, I guess I forget who asked it, but at what point of an exploration company's development is sort of an optimal point to jump in? What are the variables there?
Well, that's very easy. It's that big discovery hole. And sometimes the big discovery hole can be the first hole being drilled into a system. Sometimes it's number 88. A great example is Philo Mining, which was just taken out by BHP and Lundin Mining. They had a quite nice discovery in the Andes, a copper gold porphyry. But then they made this, they drilled this deeper hole a few years back, and they found this, actually huge, very rich, deeper part. And that hole made us act right away. And when you see a hole like that, and of course you need some experience to recognize a hole like that. But once you see a hole, let's say 1,000 meters of 1% copper, you go in with both feet. And so we entered the stock at $8 per share, while it was trading at $150 maybe a year earlier. But we sold our shares around $30 a few years later. So once you recognize that great discovery hole, don't start to research it, but buy your first position, and that's what we always do in a situation like that.
I remember reading something about Stanley Druckenmiller, the famous investor, who said that if he's researching something on his own, he hasn't quite completed his research, but he likes what he sees, he buys it, and then he has his research team do the rest of the research to confirm or deny his theory. So I thought that was kind of interesting.
Well, that's the same here. And when we see a hole like that, and that's why I'm why our trader is in the back there, and he might remember that afternoon when we saw that the news coming, your morning or afternoon of Philo mining. And actually, I told him we buy everything we can, and we put in some limit orders, but it kept running away from us. So then we started to buy market orders, and we had a first position. I think there was $250,000 that day valuation, and then in the next few weeks, you always get a first correction, a first pause after the initial hype. The same happened with Great Bear Resources. It jumped from 50 cents to 170, and then we entered the trade at 170, and then it was a large private placement. And then for months, the stock kept trading around $2, and that's where we bought 3% of the company just in the open market, because the first excitement died down. People didn't understand how important this discovery was. There was a lot of to be confirmed. And then the stock ran from $2, what was it, to $24, $28 in a few years. And they even won one of our discovery awards, which we award every year.
All right, fascinating. You're giving us some really great insight into how you operate along with your team. Last question here from a viewer, Reyna Amen. Summa Silver seems to have a high-grade silver resource. What are your thoughts about their project and potential, if you have any?
Well, we are an investor in Summa Resource. SME is the stock symbol. We were intrigued by that one because of their nickel project. Even Robert Friedland was intrigued and became a shareholder. It hasn't proven to be a tier one discovery yet. And as you might know, nickel is in a bit of a slump because there's so much let's say cheap nickel to be exported and found in Indonesia. So it hasn't been one of our winners, and we're not in Summa for the silver project, but for the nickel.
Willem, your fund caters to high net worth, ultra high net worth, family office investors. So this is obviously smart and savvy money. I'm curious in terms of the trends and topics and questions that they bring up with you. What are they talking about these days?
Actually, this morning I had a very interesting meeting with a guy who's just selling his company and will receive a huge amount of cash in the next few weeks. And their main question always is, where do we need to go with our money, but also with ourselves, especially here in Europe? There are many people who think about leaving Europe. They're not happy with the way Europe is developing. So you see many people leaving for Switzerland, which is, of course, is still in Europe, but it's not part of the EU. It's not part of the Eurozone. Many people are moving towards Dubai or have a second place there so they can live there. So people who are in the high net worth category are getting scared by everything happening out there. And of course, they're very fortunate and they have this luxury problem what to do with their money. But many of them no longer trust the banking institutions. So they look for alternative. They look for alternative advice. And actually, it's quite hard when you're very liquid, when you have a lot of cash, where to put your money, because the general stock markets are valued. They have quite rich valuations. Real estate, same thing. And with the debasement of currency, they understand and they feel they need to invest and almost flee to all the government can't print. And if you study history, if you study monetary history, and you study these periods of debasement of currencies, actually it has been happening 2,000 years in Rome as well. you know you have to buy hard assets, and that's everything the government can't print. It's from real estate to Bitcoin. I've been calling Bitcoin digital gold since 2014. I use my own model portfolio, which is 25% real estate, 25% physical gold and silver, 25% in equities, and 25% we keep liquid or in Bitcoin. And that has served me well. This is maybe not the best portfolio for everybody, but on average, it's rather conservative. And if you see what kind of dangers are out there, this one covers most of them pretty well.
Really interesting, Willem. Did you have any advice for this person today about where to put their money?
Oh yeah, we had a long meeting, and we've been discussing where to live, where to have your tax base, where to have your assets. So we almost covered it all, and most of the people we meet don't want to discuss just commodities or just gold. It's part of a larger system for them, how to preserve their wealth. It's more about preserving their purchasing power. So gold has been going up 10% on average for the last 20 years. But it tells you gold is almost like the constant factor. Money has been debased by almost 10% every year. And you must know that there's this golden rule: for an ounce of gold, you buy yourself a nice suit. And this has been the same for 2,000 years almost. Well, they weren't wearing suits 2,000 years ago. But I know another great example of the value of a Roman coin, which was found in London, a 2,000-year-old coin, and the denarius, which has 8 grams of gold. That for 8 grams of gold, you could buy a few hundred liters of wine 2,000 years ago in the Roman days. And if you calculate that at nowadays prices, again, for 8 grams of gold, you can buy a few hundred liters of cheap wine. So gold is the constant out there, and that's why a lot of these very high net worth people have started again to keep, let's say, at least 10% of their net worth in physical gold. And that's like the old rule of Swiss bankers: stick with 10% of your net worth in physical gold.
Well, you'd get along well with Pierre Lassonde if you haven't met him, because at the recent Fall Mining Showcase, he was talking about the silver denarius and how it was debased over years and so on. So really interesting stuff. Last question for you, Willem. Did you have any final thoughts for investors, large or small, in terms of how to be involved in the commodity sector?
Well, most important always is to educate yourself. So most or many investors look for the golden tip and just want to buy a name which is hot. But I think it's very important to educate yourself, to listen to podcasts like this, read books. You can download my book, The Big Reset, for free. It's on our website. I'm in the process of revising it again, because the last edition was in 2016, and it was on the BRICS. And the BRICS, we haven't been discussing this, but the BRICS, of course, are on a collision course with the West, or we should say the West is on a collision course with the BRICS. I think that's very important to understand when you want to invest in the world of commodities. So it's very important to educate yourself. And there's so much great content out there on YouTube, on the internet. I'm quite active on Twitter. So if people follow me on Twitter, they can... they will see what stories I like. And I even created a Patreon account. I charged some money for that because I was fed up by giving everything away for free. So people who are more serious about their money and to follow all these reset developments, they can also find me on Patreon.
Well, this conversation was very rich in information and knowledge. We really appreciate your time and your insights today, Willem. Take care.
Thank you, Mark. It was a pleasure.
All right. Our thanks once again to Mr. Middelkoop, Willem Middelkoop, the CIO, founder of the Commodity Discovery Fund. He joined us from just outside of Amsterdam today. Thank you very much for watching and for your questions as well. This replay will be up on Red Cloud's YouTube channel in no time in case you missed anything. I know that Colin Werb came on late, but his question was answered earlier about Solgold, I believe it was. So lots of great information, I'm sure you will agree, lots of names and lots of ideas about the macro picture too. So thanks again. We'll do it again soon, and we'll see you then. Take care.